Portfolio Builder members, this is your May 30th evening update. No trades in any of our portfolios. Our basic SPY program is sitting pretty. The SPY closed today at 278.90 and we're covered through 275. So coast is clear. We're sitting on our maximum profit. For all of you who've been following our cryptocurrency trades, we did really well in 2017 at 1,200% return. 2018 we didn't do very well. Obviously with the market crashing, we were busy programming our software and had a small view at what was coming towards crypto, really looking at the past history of cryptocurrency without realizing what was more important was the interest rates of the banks. And so the big concern with all of the bond experts is that we'll be entering into a reversal of this. So Bitcoin's only lived through a period of lowering rates and really 0%. But all the predictions by the bond experts is that this is all going to reverse. We're going to have to work down this global debt problem. Of course, right now the bond bull market is raging ahead. So I'm not saying to sell your crypto yet. But tomorrow we will be issuing you a new spreadsheet, and we are going to recommend within the next most likely several weeks or less to sell your altcoins and condense your portfolio down to just Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. And the reason why is because the second that the Chinese believe there is no fear of their currency being depreciated any further, which would happen if the trade war were to become alleviated, we need to be able to quickly get out of cryptocurrency because I do expect it will crash at that point. And so I'm not predicting a long-term bull market in cryptocurrencies unless China devalues and prints a lot of money. Otherwise, I do expect rates to get more expensive and for inflation to start to pick up. So expect a new spreadsheet coming out tomorrow morning, and you'll be prepared to consolidate your altcoins and move to a much smaller portfolio so that you can be nimble and take big profits. Now, I do think there is a long-term future for Bitcoin, don't get me wrong, but it's more likely my children who will be actually using Bitcoin when they grow up. So a lot of the wealth has to be passed down. Folks who follow our product have a hard time turning on their computer, much less entering a digital currency age like they are actually doing pretty well in China right now. So I think that we're decades away before Bitcoin has some sort of massive adoption. In our Diamond program, we're doing very well. Microsoft is still below our strike by about $1.30, but I think that we're okay because we collected $2 of credit, so we're still profitable on that. And I did delete that area. What we had there was good when we first issued the trade because it compared the strike price to the current price when we issued it. But we can just look at the strike price right here to know where we're protected to. So we're protected down the line on everything except Cisco. Cisco is a pretty small position in our portfolio. We're not completely protected on Comcast, the banks as well. So we're sitting on a relatively flat but slightly down portfolio in the Diamond Club. But I do expect to have some relief in the short term and to see the maximum return on most of these trades by next week. And meanwhile, we are carefully watching Apple as a potential target for the trade war. And so this portfolio is still long the Apple put, and our basic program is still long the SPY put. Moving along to our Whale Club, this one has continued to miss out on a lot of the profits. It's up 7.6. It's been a very boring ride on the TLT, and will spend most of its time here. President Trump Pence had a interview today saying they could potentially double tariffs, which caused another panic into treasuries, sending it to 130. So we've made all of our profits in this portfolio trading the TLT. And today's trade alert did get us out of the TLT into a very small position that is long a put option in the TLT and LQD. So this represents 0.5% of our portfolio, and it's something we will slowly limp into over the upcoming months until we do see a correction in the credit market to the downside. And so the dollar liquidity crisis continues to grow, pushing the dollar higher. One of our favorite leading indicators for the stock market, the KOSPI, is still pointing down. And a look at inflation, rising tariffs could quickly change this and heat up the inflation picture, which could potentially force the Fed's hand to raise rates. So again, that could create a sell-off in the TLT, a sell-off in the stock market, and also a sell-off in cryptocurrency. So this is a big risk to look out for. And if we do go back to the long-term picture of the Dow, we look at the Cold War period when it really heated up, and we had a very long bear market. So this is the type of bear market Ray Dalio is predicting and has been predicting, warning people for about the last year or so aggressively. But the short-term reaction is to buy the last safe haven, which is to convert all your money into dollars and into treasuries. So that's a quick look at our portfolios. No changes today. For the whale program, we did decide to make a small tweak so you can follow it with only 300,000 because we didn't want to have the overlap in the diamond and the whale. So there's now no overlap. The whale primarily trades the bond market, but will buy Amazon and Google when the VIX spikes above 30. This will be a scary time. Most people will be running for the hills in the stock market. That's when we will rotate out of the bond plays and into a very lucrative equity position. So now I have some charts, tweets, and other graphs that I'd like to share to close out today's video. Bond King Jeffrey Gundlach predicting TLT hit a top. Of course, probably didn't expect Pence to warn of doubling the tariffs, which is absolutely insanity. This would totally wreck American companies who rely on imports from China. I personally know people who are going out of business because they cannot make a profit with these taxes. And so perhaps he just really means doubling the amount of goods that are being tariffed and not doubling the tax. Here's a chart showing corporate profits slowing down. This is a chart and just a clip from a big YouTube video where this guy's really an expert at all of these different rare earth metals. So if you want to pause and zoom in on that, go for it. While everything else is crashing, Beyond Meat, the pea protein fake hamburger patty company, is continuing to march up, which is one of the few IPOs doing that. And their fundamentals aren't that great. Negative $22 million, $29 million net income with what they have up so far for 2018. Of course, now KFC is talking about buying their product. Goldman cuts Q2 GDP estimate to 1.1 from 1.3. So they're saying that the tariffs pushed the GDP higher as they rush to front run the taxes. So we'll see if that's true or not. And if so, would be a very big, slow decline from 3.2, which was revised down to 3.1 today from last quarter. We can see in this chart that cash is flowing into defensive stocks right now and outflowing out of cyclical. Little clip with Trump saying that either today or tomorrow he'd have his biggest statement on border policy. And I just post that not because it really relates to our financial positions too much, except that it may help us judge his character in terms of how far he's going to push this China trade war. And again, you can join our Telegram feed and see all the content that I'm publishing. This is sort of a live stream of what I'm listening to. studying, reading, and highlights that I'm pulling out of that content. This was a recent interview with one of the Fed vice chairmen, and basically just continuing to support that they may reduce rates if inflation becomes depressed, but are really ready to raise rates slowly and gradually as the data shows that this would be useful. The housing market had a nice jump right in the beginning of the year when the Fed first paused the rate hikes. But now that they have not discounted rates further, we're seeing a big drop in pretty much everything related to the housing market, including existing home sales and pending home sales. And so we can see some negative bars, but nothing like the 2006, 2007, 2008 lead up. Rabobank, without capital controls, CNY and the Chinese financial system would collapse. So they have a huge amount of debt. They do not make it very transparent, and control everything from a small group of chosen people in their Communist Party. This didn't work out so well for the Russians, but the Chinese have been growing rapidly. So we are keeping a careful watch on the dollar to the CNY and watching for it to slowly work its way up to 7. Now this again is how the Chinese can help offset the cost of tariffs, but the catch is that the rich Chinese now realize their money's worth less, and that's what's been pushing people into the dollar, into US treasuries, into cryptocurrencies, into gold. Zuckerberg and Facebook are under a lot of scrutiny now. Says company should not write free speech rules, and then they joke that they should just ban anyone who breaks the, quote, community rules. Pence, U.S. can more than double tariffs on China if needed. Here's some different looks at the S&P 500. Quite a sell-off in the past month with a little bit of relief finally. Here's a 6-month look. Here's the 1-year look. Here's a snapshot of the bond market. 10-year at 2.2, 30-year at 2.6. Rest of the world negative except for 1.6 out of Hong Kong. Now we're not looking at some of the smaller economies, but if we do look at some of these major ones, 30-year crashes even lower today thanks to the Pence comment. More fear in the market. 10-year hitting a low as well. Here's the exchange rate of the USD against the CNH. Creeping up towards the 7 conversion rate. And then a surprise crash in crude oil prices today. Just right in the last few hours, really. So here's a few other looks at the crude oil. This is the 3-day price. So we're seeing just a shock to demand around the world, which the bond market is pointing at these low rates. So this is a 6-month look, 1-year month, and a 5-year. Now we're going to take some snapshots at the cryptocurrency market. So we were looking at a prediction of a run up to 5,000 in Bitcoin, and now it's already up to 85. It hit 9,000 earlier today and had a little sell-off. This is the 3-month look from Robinhood. Robinhood's my recommended place to trade crypto because we're going to want to sell it all and convert it to dollars in no time and then get ready for it to crash and buy it back. So I do like cryptocurrency when we look decades down the road. But short term, I think it may have some trouble ahead. So we're going to try to help you guys find the top a little bit better than we did last time. And so what's important is, even though Bitcoin's had such a remarkable run up in the past, it's during a time when money was basically free to all these banks who basically just have software that goes and buys everything. And that's why we see all these altcoins and Bitcoin go up and down together. So they're all tied and pegged to one another. And so essentially, we're going to recommend getting out of all the altcoins so that you're very nimble and fast to react to trade alerts, so that you'll now be covering a 4-coin portfolio as we march to potential top. And so I'm skeptical we will go anywhere near 20,000, and we'll be soon issuing an alert to take some profits off the table. So the first alert will be to consolidate out of the altcoins into our 4-coin portfolio, and you will get a new spreadsheet if you're one of our paid customers tomorrow, so that you can convert into the more simplified platform, and then will help us be prepared to take profits when the time comes. Here's a look at Bitcoin Cash. This is the 1 week, the 3 month, the 1 year. Ethereum, the 1 day. Here's the 1 week and the 1 year look. So nowhere near the extraordinary highs of the past, not even close. For the second day in a row, the biggest buy program of the day hit exactly 3:33 p.m. So we're seeing just the buy order into the New York Stock Exchange 2 days in a row. Closer look. The market's being pumped. Here's a look at gold. Takes a lot of money to move gold. Has a huge market cap, closer to $8 to $10 trillion. And if there was some sort of reputation problem with the central banks, which certainly there could be, or with the governments, we may need to get back to a gold standard. So that would help drive a lot of demand for gold. And we've seen China and Russia buying up gold for the last decade to increase the reputation of their currencies. Now, of course, they want to get the US dollar hegemony out of our control. And so that's probably a long ways away, but that's the long-term end game for them. Emerging markets very strong today, so there's some relief in the equities market that everybody's just kidding about the trade war. We'll see if that's true or not, but good to see some relief in the weaker market. Of course, if the weaker market, which would be all these emerging markets and developing countries, were crashing, I'd be concerned for the U.S. market in the short term, and we'd want to have a much lower strike than we do right now. But currently there's signs of relief. Here's a look at emerging markets over the 1 year chart. 5 year. When you look at the 5 year picture, if they can get this trade war out of the way and start attracting American capital, China and its developments really make a lot of sense. And really, China's not in a position to go bully terrorism around the world. They really need to be a partner with America. So I think, there hopefully is a chance that these two great powers do not collide too much and come to middle ground without waging war. But we'll see how that plays out. Here's the FXI, the large cap Chinese stocks 1 year, looking pretty cheap as long as things don't escalate, but that's a big if. And the stock market seems to react very quickly to news now, so they know that everyone's making these threats, but they're calling a bluff on all of it. Here's the Indian stock market now near highs for the past year. One of the fastest growing economies in the world for quite some time now. Tencent, this is a very leveraged company that's investing in growth tech companies that make no money, and that's not necessarily true. They do own Fortnite, Clash Royale, which make a lot of money, but make no mistake, this is an extremely leveraged company and also a good leading indicator, showing a little relief here, but again, if things do ratchet up between these two countries, there could be a lot of pain ahead for equities. High yield portfolio, a snapshot of our positions: Apple, Bank of America, Comcast, Cisco, Facebook, Microsoft, Wells Fargo, strategy is to do covered calls every Tuesday on this. This is our diamond level membership. And so those are doing very well, hanging in there. And again, because we sell in the money covered calls primarily, we do well in multiple directions, up, flat, and down. Apple, again, we're paying the most attention to because it is the target for the trade war if China really wants to strike back. So Apple has been selling off to reduce the risk, but not too violently yet. Here's the 1 year look, the 5 year look. Here's Bank of America in a 1 year chart. Kind of just bouncing around there, doing a lot of nothing, which is great for covered call writing. Comcast, we are a little more bullish on, and you can see why when you look at this chart. Now that America's helping protect it in the 5G race, a lot of advantages for it and Cisco, which we're playing bullishly in both. Facebook is just a monster that really has a monopoly in its space. Microsoft having a little bit of a sell-off, but this is one of our safest positions in the entire portfolio and the largest position in the S&P 500. Wells Fargo hanging in there. I think it has a lot of support right here, and we're a little bit bullish on that covered call this week. Here's a list of trade war stocks I've identified to track. No big nasty sell-offs today, so that's good news. If we look at REMX, people are realizing, I think, that this is not a good ETF to invest in because it's mostly Chinese companies, and those Chinese companies are going to lose a lot of business if they are banned from selling to America. So not sure why anybody would buy that, except that they're kind of mindlessly pitching it on Bloomberg without realizing what's under the hood. There's one company that's American in there that's the fourth largest holding, TROX. I don't know enough about it to speculate on that, but my analysis is that REMX is probably a loser for playing the Chinese using that nuclear option, which perhaps, if anything, would be a short instead of a buy. So Qualcomm, a leader in the 5G technology race, keeping track of its health. Here's some of the recent IPOs. Gives us another gauge at the risk appetite of the market for new companies. Most of these are losing money. In fact, all of them are. And so if we do look at their charts, Beyond Meat is the only recent IPO that's gaining traction. Lyft, Tesla, well, Tesla's not IPO, but one of the big bond buyers in the market. So we are definitely keeping a close eye on this one. It's also related to that put option on the LQD ETF. Here's Uber hanging in there for now. Our whale club, we did remove all the stocks out of it except Amazon and Google related to when we would buy them. So we're waiting for the VIX to spike, the prices to crash, panic in the market. That's when we would hop into Google and Amazon. So you'll need 100 shares of each minimum to follow that program. So it should come in around 250 after we've seen a significant sell-off, maybe around 220. In the meanwhile, it's making boring trades on the bond market, looking for easy hanging fruit. So we just traded the TLT for the past 6 months, and now we're in cash with some small, tiny put options on the TLT and the LQD ETFs that expire in 2020. About half a percent of our portfolio is in those put options. So we will slowly build on that as time progresses, but really the big position will be next for this portfolio to pick up Google and Amazon on the cheap. So in the meanwhile, it will play tiny positions, hedging against a credit crash. And so the short-term knee-jerk reaction is everybody's still buying their bonds, and the dollar So here's a look at these ETFs hitting highs, all-time highs, nearly for both. So TLT could go up another 20 bucks to get to this recent high in 2016. And LQD would have to go up only $5 more to get to an all-time high in the same period. And so Bond King is predicting rising rates because of too much supply and too little demand. So also Deutsche Bank is a good bank stock to follow for the credit health in Europe, which Bond King also, Jeff Gundlach, is predicting will be the first to crash. And so this has been crashing for a long time, and that's why we're not short it right now, but we are using it as a gauge for what potentially could be headed our way. So that's a wrap for today's update. We do have a special deal right now. If you call Dean at 505-322-7515, you can get a Whale Club membership that gives you access to all 3 portfolios, including the Bitcoin, making it a bonus with 4. Lifetime membership is $4,997. Now, normally that costs $10,000 a year, but you're going to get lifetime access for half that price. If you're just interested in a basic program, we can save you $100. And if you're interested in just a diamond membership, we can save you $2,400. So call Dean. He'll walk you through everything and save you a little bit of cash. 505-322-7515. New trade alert for basic members tomorrow at noon Eastern, probably a little bit before that, and then another update in the evening. And expect a fresh spreadsheet if you're a paid member, primarily for moving your crypto coins over after you consolidate to a smaller portfolio size. So thanks again, and look for a new update tomorrow.